So when we go on a candle by candle basis, we're looking for the narrative. There's one right there. It's a downtick red, an uptick purple, and an uptick blue. The red is into a new low. That is the perfect narrative. That is a perfect narrative. Didn't happen anywhere else. You can see that when the red line's dropping here, the purple line's dropping as well. So it doesn't happen anywhere else. That's the only point it happens on that whole phase. 100% that is a sell trade on oil. 100% of the time that will be a sell trade on oil. Yes, absolutely. You do not get that spike on the crack spread unless there is a belief that oil prices are selling off, guys. That is as simple as it gets. So when we look at that on oil, we can see that that is going to be a sell trade on oil. I am absolutely convinced that that is going to make me money 100% of the time. Otherwise, I wouldn't take the deal. What happened? It did okay. Didn't do badly. It was a sell trade at a price of 73s, traded at a low price of 40s. $300 in 120 seconds. I'll take it any day of the week. What happened next? Well, it carried on selling. Carried on selling. You couldn't make it up. It carried on selling. And eventually, that trade made over $1,000. Crazy, right? Crazy. So when you see it, there's other trades that you can also fix. There's other trades that you might not recognize as possibilities. And I want to make sure you do recognize these because a few of you guys are trading this. The red line, purple line divergence in the direction is also a reasonable trade. It's a momentum trade like that trade there. See how the red line accelerates less quickly than the purple line and the blue line. That is also a possible trade, but it's a momentum sell, not a fade. You've got to get into that trade rapidly. So you're not going to get top edges. If you get a top edge, of course, you would take it, but you're not going to usually get a top edge. That's the kind of trade that would have been a perfect banker trade, perhaps in forming, and then it reverses round, which is why it's lagging behind the purple line. So when you look at that trade there, you start looking at that candle and you start seeing that it did pin up into that area and then sold off. If you're watching that in real time, you say, I'm joining in with this. This is going to be a great sell. And that was the sell that actually led the move. It's beautiful. Does anybody see a banker trade on the right-hand edge? Anybody see a banker trade setting up on the right-hand edge of that screen? Damn right there is. Right there. Right-hand edge. There it is. Can't make it up. Is that a buy trade? Damn right it's a buy trade. Absolutely. What is my concern? My concern is that we haven't taken out the prior red level here, which means that there is obviously a liquidity area that needs to be perhaps grabbed. And for that reason, I need to be very careful with this buy trade. I want to make sure that I'm not going to get stopped out by the stop out, if you know what I mean. So obviously when we recognize that that is a buy trade, I start looking into the background, I see where the levels are, I start thinking to myself, could I make money buying into this? Could I seriously get a buy flip off of this trade? It ran down a little bit into that area again on the retest. The value is still very good, and I can buy into this with a very, very high degree probability trade. Some people wonder how we can trade 200 times a day and make 200 winners. It's not that difficult if you're very careful with your entry process. And obviously you can see what happened. It wasn't the best outcome, but it went from 70s to a high price of 20s. Still worth $500 in 2 minutes. Pretty good stuff, right? Pretty good stuff. Any other trades that stand out? Is there anything that stands out? Now some people will look at it and go, well, what about that trade there? That's an absolute banker, surely. You can see that the red line goes up into a new prior high. The purple line's dropping. The blue line's dropping really quickly. That is an absolute standout opportunity to do a buy trade right there. Yes, absolute standout opportunity to buy into the oil price at that point. Remember, it's not a standout trade yet. We still have to find a lean. We still have to find a book buyer. We don't want to just buy it because this chart tells us. That's not going to be enough to be consistent on these trades with big stops. So we want to make sure that when we're taking this, it lines up with the rest of the information we have about book trading. There's the buy trade, massive increase in volumes, and you start saying to yourself, holy moly, that is going to be a deal. That is going to be one hell of a deal, but I've got to be careful of taking a bit of heat on this volume. And the buy trade, well, how did that buy trade do, guys? How did that last buy trade at 106.45 do? It's just traded 108.20s. It's only $1,800 per contract in 20 minutes. So I think we can agree that it did not too bad. It didn't do too badly. Was it a banker trade though? Well, that's up to you to benchmark. Was it a banker trade? Look at the acceleration on the blue line. Is that not part of the benchmarking process, Cliff? The acceleration on the blue line. So for example, look at the acceleration on the blue line, which is the crack spread on the previous banker sell trade here, on the red line, banker buy on the oil. Look at the acceleration of the blue line. It's not massive, is it? So when you see the acceleration of the blue line there and you think to yourself, that blue line could probably reverse and take me off this trade literally on the very next candle, couldn't it? So therefore the acceleration on the blue line becomes part of our considerations. The idea that I'm not really seeing an awful lot of value in that trade is obviously now a concern. What else? There's not very much else, is there? The separation from the purple line, the separation from the blue line is incredibly important. The bigger the separation, the better the trade, because we can't get pushed off the trade on the very next candle. So when I see the blue line dropping down as aggressively as that, the chances of me getting wiped out on the next candle are almost zero. That means that my chance of making money is almost 100%, right? But that's not all. What else do we want to see? I want to see some sellers getting jammed. I want to see some sellers getting jammed as part of my benchmark. I need to see a seller getting jammed because that gives me, as a local, it gives me confidence that some commercial dude sees the same trade as I see. So I'm coming along the price levels here and I'm thinking to myself, do I see some guy getting jammed? Let's see what happens. Wow, look at the size of the volume in this bad boy, and Voltic's kicking off. That's great news. Look at the book divergence, guys. Wow, that's crazy good news. Massive book divergence. Voltic's kicking off. I'm getting close to my trade, surely. And there it is. There's the trade. I'll take it along one more candle so you can see it. There it is. Take a look, guys. Take a look into the bottom edge of that candle. What do you see? Sellers getting jammed. Sellers getting jammed into the bottom edges. And we say, right, I'm going to start putting my buy block in it, my buy reversal trade at 44s. And then we get another block at 39s. And I say, right, I'm going to buy at 40s now. I'm going to buy 40s. Let's get that price tight and ready to go into the 40s. It's time to get long at 40. Let's see what happens. I've got my buy stop order in place at 40. The price pins off the 45 sellers that are getting jammed into that price, fills me at 40, 41, 42, perhaps on a bit of slippage. And I'm now in a buy trade that just suddenly made myself $400 in the first 60 seconds. That's a result. That's a result. And what happened next? It just carried on going. We got another seller getting jammed. And then it just carried on going again. And we say, wow, that's turned out to be an absolute ripper. Look at that, guys. Look at that trade. And obviously when we get away from that benchmark and we say that is genius, that is absolute genius. So it was, guys. That was that sell trade guy that got jammed as well just in there. You could have perhaps added to your position there if you'd taken some profits on the earlier rally. You could have added back into that stage because you can see red over blue on a macro scale is quite obviously well established at that stage. The red and purple over the blue is very, very obvious. So obviously what happens? The price just goes. We're starting to see the price running out of steam here. You can see the blue line's now rising into the high prices. That is an exit. That's a walkaway trade for me. And it's time to clear your books. There's your walkaway trade there. That's it. The trade is finished. Why is that the trade finished? Because for the first time, the purple line is rising. For the first time, the purple line is rising with the blue line and the red line is falling. For the first time. And that is your walkaway. That is even a possible sell trade. Never mind the walkaway. That's a possible sell trade. And obviously what happened next was that was the top edge. And since then, oil has sold away from that price. Incredible. Due to that benchmarking process. There was your buy trade. There was your walk away. 108.20s from a buy trade of 106.40s. Crazy, isn't it? Just by going through that benchmarking process, you've absolutely destroyed the marketplace, haven't you? You don't need many of those trades to be a very, very wealthy trader, guys. You just need to find one or two of them a day. One or two of them a day. Remember, when we're talking about this idea, there's a lot of moving pieces. So you can see, for example, in this chart, you can see that black line. You could say, well, I'm going to sell bonds here. Perfect. You can see from the black line, you could have said on a 2-minute chart, I'm going to buy bonds here. Perfect. What's the current trade? Buy bonds. Still buy bonds. These are dropping, so I'm going to still be buying bonds. If the bond price comes back up to the prior high here at the present moment, I'm going to be buying bonds, right? So we're already able to recognize the fact that we're buying bonds in here. We're already able to recognize that we should still be buying bonds. We can already recognize we should have sold some bonds into that phase there. And that's pretty obvious. I can see it. I can understand it. I can watch the value evolving and recognize that that is a sell on bonds right there, which is that price there. This is a buy on bonds, which is that price there. And obviously the sell makes me money. The buy makes me money. What's so hard about trading? Nothing, right? 2-minute chart on the Ultra Bond, buying off the 3s, traded a high price of 10s, sold off the 16s, traded a low price of 3s. Huge profits, 2 rotations. I told you this was still a buy. I told you this was still a buy when the price was 6s. It's now 10s. Told you it was still a buy, and it was 6s. Trading 10s inside the same candle that I told you it was still a buy on. And you can see that that 10 is now worth another, potentially another 4 ticks, 3 ticks, 2 ticks, whatever, stops at break even anyway. And you can start to recognize that this is not a one-off when we find these trades, guys. This is just common. This isn't something special. It's not something excitingly different. It's common what we see. We can see that it's still a sell in the black line. It's still a buy on bonds. Still a buy on bonds. So we're still bidding down ticks. Now, what's gone against that trade for the time being? At times, the purple and the blue line are sometimes just flicking back up again every now and then. So we've got to be careful with this. But it's still a buy on bonds. I wouldn't be trying to get away from this trade anytime soon, I don't think. If we zoom out a little bit, it's still a buy on bonds. We zoom out a little bit more, it's still a buy on bonds. It's still a buy on bonds. So we actually can work our way through these processes. Max took a buy on equities, by the way. Sorry, guys. It's just the fact that it's retested the level that Max bought at. And it was an S&P buy. Oh, yes, it was an S&P buy, not a NASDAQ. So there's the trade just there. You can see that Max came in at the downtick phase here into that the day low liquidity, ran the stops, got the price that Max wanted, picked up the buy trade right there, and absolutely leathered it to the upside. Look at that, guys. 41s to 55, $700 in 4 minutes on the Max trigger. $700 in 4 minutes, guys. Couldn't make it up, could you? Could not make that one up. What a great trade, what a great trade, Max. What a great trade. Love it. So since 8 o'clock, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 out of 16 winners since 9 o'clock this morning. 16 out of 16 winners, guys, since 9 o'clock this morning. Doing the business, doing all right. That'll do, donkey. That'll do, donkey. Time for a little break, I think. Grab a little bit of coffee. We've kind of already been doing classrooms all the way through today because it is a Friday after all, and